Welcome back, traders and investors. Working out the bugs here on the day after President's Day. We have Nic Chahine creating income with credit spreads. Got you up early this morning, Nick. How you doing?
I'm doing great, guys. How are you? I mean, I wake up feeling guilty. I look at the temperature gauges on TV, and it's my goodness, you guys are waking up to 30s and 40s and 20s, and I'm waking up to a nice 60.
Waking
So
up to
I can't
five
complain.
more inches of snow too here, so it snows every day in Detroit. I think it's ridiculous.
So,
Yeah,
uh,
I can't complain about waking up early. So I'm
uh,
good.
so when we talked to you last week, you were looking at this Apple stock, and you were looking create some income with credit spreads on this one. How did this one work out for you?
It worked out well. It never worked out perfectly. I say that because I have some rules as to whenever I get a good pop in a position, even on credit spreads, which people don't think about as scalping, I have to book it. So, when I have a trade that's got 2 weeks on it, and in a day or two I get 40 or 50 or 60% of the maximum gains, I book it. It's not ideal booking early, but at least it's a profit in the books. So I do that always. So I didn't fight it on the upside, meaning that I went long it with a credit put spread. And last time we mentioned that would be selling a put and buying a put lower, and it's a bullish position because I wanted to stay away from that the put, and that worked out pretty well. Somebody last week, if they sold the Apple calls at 5:45, they made money. The open interest last week told us that it's likely to happen, that the 545 would survive. And indeed, somebody sold them. They made a good penny there. I have a few friends that did that.
Yeah,
Talk
what?
about that open interest there for a minute. We've talked about this on the show a few times in the past, but the way I look at it is when the open interest is really high at a contract position, that can actually kind of block the stock from going higher. Are you looking at it from the same perspective, or how do you look at it?
Exactly, exactly. What I do is I have a couple of spreadsheets and I dump the open interest in them. It gives me a visual um, ruts or speed bumps, like you just mentioned. If I see a high open interest at a certain level around the money, wherever the stock is trading at, then it's likely to create resistance. The assumption there is that market makers or the market, so to speak, wants to hurt as many option holders as possible, so they want to keep them out of the money to have the options expire worthless. That's the way I think about it very easily. So yes, a high open interest usually creates a speed bump or price. It may go through it, but it's going to slow down a little bit. And if it's too big, it may decide to go the other way or
It's
not
all
cross.
it's all kind of relative though too, right, Nick? Because you would look at, if you just take this and if you're a newbie to options, you might look at Apple and say, oh, there's so many contracts there, that looks really high. But you got to kind of look at, what the other contracts are too, and what historical high rates for Apple are as well. Because what's, if you just take an absolute number, it's kind of meaningless. You got to kind of compare it over the series of open interest, correct?
Yes, exactly. I looked the whole thing, both sides, puts and calls, and the total and what it's doing. Also, you got to look at the news. You know, usually whenever I'm always bullish Apple. I mean, how can you mess up a machine like that? It would take I've said it before. It would take a special kind of idiot, right? And he's no idiot. I mean, you might not like him, Tim Cook, but Steve Jobs chose him, so he must know a thing or two about Apple and how to grow it or continue moving this big machine. So in the mid to long term, I'm bullish Apple until things change. But having said that, I always make a joke like, okay, the market's going to punish it because there's no flying car. Well, this morning, we know that there might be, the whisper of them meeting secretly with Elon Musk of Tesla. So, the joke now is almost real. Flying cars, Apple, who knows? So you got to look at the headlines too. It's not all about open interest. It's just one part of the puzzle.
Okay, so the market's had a nice run up here. We're bumping up against the all-time highs and whatnot. And you had some bullish positions on the pullback. Are you looking for a little pullback here, or are we just going to continue on our merry way through new all-time highs in the index?
Believe it or not, I still have the same thesis as I had at the end of last year. We're going to creep up. There's no doom scenario that I see. We had a potential of one with the jobs report that had a big potential, negative potential. We passed it. So now we need a new shoe to drop for us to have another doom scenario. Faber was on today. I don't know why we keep giving him news time. Shocker. It's not appropriate, and I'm quoting here, almost not an opportune time to buy equities. When has he ever said it was? So anyway, the doom scenario needs a new shoe to drop. So I'm not going to short the market outright. We may meander and maybe creep up a little bit and drop down a little bit, but I don't see any giant swings either way. So good time to sell premium. So for example, I'm going to fight Google on the upside with some credit call spread this week, but I'm also hedging my bet by a few smaller debit call spread lower. So it's kind of like financing a little move up
Okay.
in Google.
Can you get more specific than that? I don't know if you want to or not, Nick, but
Sure,
just for our guys.
I can. I can. For example, if Google is at 1,205, I would challenge it at 1,230 or 35, for example, with a credit call spread. I'll sell the 1,230 and buy the 1,235 call. With that, I take income. With that income, I buy a debit call spread closer to the money, smaller size, and this way I collect income. I'm hedging my income with, betting against myself smaller and lower. And I can spread time to make the math work out. So I'll sell next week's up on the credit call spreads and buy this week's, which would be cheaper to buy on the debit call spread, which is a bullish position. So sell the bearish position to finance the bullish position. Play with time in order to make the math work out. And you'll have a decent scalp in Google. Move up a little bit, but not reach the higher levels.
And what's your worst case scenario?
On that position like that?
Yes.
The worst case scenario is you get all the money out of your debit call spread for this week, and the other one, let's say Google shoots to 1,300 tomorrow, and the other one gets fully in the money. So the wrong way. So the maximum loss, let's say you do 10 contracts and it's a $2.50 spread. Your maximum loss is 1,200 on the top line, and your maximum gain on the bottom line is 250 times however many contracts you decide to do.
Okay, so it's even, because a lot of people, when you think with the way you did that, you're not open-ended on the loss side, even though you're short the higher level coverage spread because you had lower. No, it makes sense. Just quickly here, we're looking at a stock that's on a lot of support here. PepsiCo is trading on just multi-month lows here at the $78 level. You have that on your radar at all?
No, I look at it. I don't get a lot of good juicy premiums off of those guys.
Okay.
So, the stock, obviously, the company has excellent management. If you look at the stock, it's just a whole bunch of ups and downs and predictable. So, I'm looking at a giant couple of candles recently, which I don't know if a stock of this quality deserves such a thing. They're obviously doing some things right for being a great company, well managed for so many years. But those two giant candles would scare me to jump in, even though they're good support levels. I'm looking at the 78 all across the last 12 months back. It had a step up from that price. So now comes the decision: what does it do? Does it revert to the prior year range, or does it stay in this upper range here? So it's a coin flip almost. And if you know me, I'm doing credit spreads. I never invest on coin flip. I like the odds being better than 50-50. That's why I do credit spreads. I like them more than like 90%. And this is so far from 90, it's not even funny for me.
Good.
So I would wait for me. I'm not jumping in.
It sounds like you like to pick on the big boys then, where you can really grab some premium. Which stocks, like you talked about Google, you talked about Apple, which other ones do you like picking on there, Nick?
Yep. I do like the big boys. I like the premium. I'm going to miss Google at 1,200, but I'm sure I'll find a way to make it work. But the usual suspects. This week, I'm going to pick on Google and try to challenge it, play chicken with it, like I just mentioned.
Yeah.
Priceline earnings are coming, and he's in beast mode right now. He's hunting 1,300,
wow.
And I would only play it with Lotto, meaning I'll pick a ridiculous debit spread and I'll buy it for the earnings. I did that with Google, and it paid well when it jumped from 880 to 980. That was but it was just literally a Lotto ticket. And after the fact, I'll trade it like I trade Apple, always on the long side with credit put spreads, but not until it reports. LinkedIn is interesting to me right now. I've been telling people to stay out of it because it's legging down, and they really punished it. And the 200 fell. I said, don't touch it if the 200 falls because the 190s come quick. They sure did. I said, don't touch it because below the 190 you got a big chasm. So I'm looking at entry level in LinkedIn. I can probably wait until the 180s, although today it's looking like it's going to be a 187 or so. Last week, 185.73, I think, was the low. So I want to take an entry point in LinkedIn just because it's a street darling, and I don't particularly like the company as using it, but they're doing things right, apparently. So a credit put spread in LinkedIn is definitely on the books for this week.
This is a little different from your normal strategies here. I mean, because I mean, if you could, argue the stock is kind of, with its last earnings play here, is under a little bit of pressure. I mean, it looks so the kind of deviating from your, or you're not? Is this are you still following this stock on the fundamentals?
Right. I'm still following it because they're being punished, and I'm not jumping in. I have not jumped in. As a matter of fact, I've been saying stay out. Hold on. It's like somebody behind a sandbag saying, "Don't shoot now. Wait until they come within, eyesight." If you're sitting in a bunker, so just wait. Ideally, I want it under 180. Under 180, I'll take a shot with a credit put spread. And when I say that, I'm not taking it at the line. I'm building a buffer below that. I'll take a little less premium, and so the reward to risk is not as sexy. But guess what? I've got a 95% chance of success. I'll take a little less premium for that, and I'll sleep well, and I won't worry about a $2, $3 move on me.
Yeah, that's the way. That's the way to do it. Okay, just real quickly, that you mentioned the Lotto theory here, and Dennis, likes to talk about that. I mean, you need a special situation for that to go in. Do you see any kind of? I mean, winding down here towards the end of earnings season here. You see any kind of any Lotto scenarios coming up?
Yep, Priceline, I mentioned it, and I think that's the only lotto I'm going to play this week. The premiums have gotten so crazy that it's become harder to find a good lotto ticket. So now you got to pay up a little more for the lotto ticket, and I make it simple. I either make it a regular debit spread where I just pick a level that's way out of the money, that's going to cost me a couple $100 and have a nice upside to it. If it goes through that level and up or down. Or I find if I want to invest a little more money, just a straight up call or straight up put, depends on where you want to go. And on Priceline, looks everybody's lined up for upside. And I don't usually pretend I'm smarter than the average bear, so I just go with the flow and pick something high up and hope that Priceline delivers and everybody loves it.
So you're
Okay.
just buying an outside call and then selling a higher call? Is that what you would be doing? Like buying like the
you can buy
1350s or something? Yeah.
Yeah, something that's above 1300 by a long shot because if you want to get cheaper, and if it moves up 5%, 6, 7%, then you're in the money. So I know it sounds like wasted money, but either that or you sit it out. I'm not. Again, it's a coin flip. It's not whether they're going to deliver the numbers. It's how the street
That's
reacts to the numbers.
Okay.
We can't forecast that.
And then finally, DJ's looking at Target here. Stock's just been under pressure a lot with the credit card snafus. Now coming back down to this $55 level, which was support in 2013 in the middle of the year. How you looking at Target here?
Target, nice place to shop, I hear. But headline stocks always scare me. We're always, the headline can go either way. I keep saying it, coin flips. You said it's gotten down to levels, and that's, I'm looking back like 2 years. Those are decent entry levels, one would think, but you add in the headline risk. I would take a wait and see because the headlines could be really big. I don't know anything about what happened with their credit cards as far as
Correct.
other than what they said in the news, and so much more can be there. I know of 3 people personally who have had their cards cloned. They were cards in Target, so I really don't know the impact that it's going to have on their earnings or any headlines coming out. So I would find easier money somewhere else. You guys mentioned Goldman Sachs last week. You asked me about Goldman Sachs, and I said I would wait and see, and it sure did nothing since then. But it seems like the whales are jumping in based on these reports this morning into the financials. Goldman Sachs was one of them. I think JP Morgan was another one. So maybe retail is not the best place to start picking. Maybe we start looking at financials. So if I had the choice between Target and something else, I would go to something else.
Okay, that sounds like good advice there, and it seems very consistent, with your patterns of investing too. So, all right, well, we'll keep all this under consideration here. Nick, thanks for coming on again on our Tuesday spot. Really enjoy it. Help us get a good look at the market. So we'll let you get back there to your morning coffee in the sunshine, and we'll speak to you next week.
Thanks for the opportunity, guys. I love it.
Okay, thanks,
Thanks,
Nick.
Nick.